Today, we saw the S&P 500 flirting with correction territory, and we're going to talk about what normally happens once this occurs. Now, we come over and look at the fear and greed index. Right now, we're sitting at 14. There is plenty of fear out here in this market. Now, it's not only the fear and greed index, but we come over and look at the most recent investor sentiment survey. And once again, this is the lowest reading we've seen in quite some time. We've dropped even lower on the bull side, down to 19.1. Also, the bears came back on this week as well at 59.2, up from 57.1 last week. We come over and look at how the indices fared across the board. The Dow was down 537 points. The NASDAQ was down 345 points. S&P 500 down 77 points, with the Russell 2000 being down 3.02. When we look at advancing issues versus declining, we had 74.6% of issues declining on the day. Then as we come over and look at the sectors, only two sectors were in the green: basic materials and utilities. Every other sector was in the red. There was essentially nowhere to hide out here in this stock market. However, when we come over and we look right here, this is what's causing a lot of problems in the market. I'm not going to bend at all. Trump doubles down on tariff plans as stocks sink. We see Trump going back and forth with Mexico, with Canada, and now with the EU. Then as we come over and look at the S&P flirting with correction territory as Trump's trade war escalates, here's what history says could happen next. Now, if we scroll on down here, there's a pretty nice graph right down in this area. And this basically shows us 1 week after entering correction territory, we can see if you go ahead and scroll down to the bottom of that column, we can see that 66.7% of the time, the market is actually higher. However, if you look at the next month, we can see there's only a 40% chance the market's going to be higher. 3 months later, there's a 60% chance will be higher. Then 6 and 1 year later, also increases the probabilities that the market will be higher. So we got to ask ourselves, is this turmoil that we've been seeing in the market nothing more than a buying opportunity? We come over here and look at all-time highs right down towards the low. We can see the SPY was down 10.36%. If you look right here at the closing price, the SPY was down 10.10%. And when we look at the MACD indicator, still looks extremely weak at this moment, showing no signs of firming up on the daily chart. Every day just seems to produce a new low in this market. We come over and start looking at the 4-hour chart. 4-hour chart, we see the MACD indicator starting to flatten out here just a bit. So could we be in the early stages of a rebound rally as early as tomorrow? As we come over and we start looking at the 30-minute chart, notice now we're starting to set up some MACD divergence. Look at the lows over here. And I warned you guys in yesterday's video, when the MACD indicator gets towards the zero line and we are not pushing out from this lower levels, watch out, we could be getting ready to take another leg lower. And that's exactly what transpired today. Now, is this part of the trap like I talked about in yesterday's video? As we see, the MACD indicator is now at a higher price point. We can see the low in the MACD indicator is not nearly as low as what it was just a few days back. Now, when we come over and we look at the futures markets real quick, notice out here on the 4-hour chart, we had this lower level consolidation. We have broken back below it. Now, if we can really get above this high of this candle at about 55.59, there's a good chance we could rally back towards the upper part of that range. Then as we come over and start looking at the daily profiles, notice today, all right, value area low is extremely low. We had a 113-point range. Now, some of the things I want to look at out here for tomorrow. One is going to see, can we come back towards this area right here, this structure breakdown point? We had one test. If we come up there again, highly probable we'll go ahead and break that level. Now, ideally though, if you're looking to go long this market, let's see, can we have tonight or tomorrow flush down below value area low and then go ahead and turn up higher, and then maybe go ahead, test this level, and then start working on some of these other swing points out here from today and get a dead cat bounce, short squeeze rally, and see stocks start rallying on up higher. Keep in mind, as we come back over and look at the 4-hour chart, if we want to be conservative on this measurement, we can measure a Fibonacci retracement from this swing right here, right down towards the low. Now, a normal retracement, a very minor retracement at that, would bring us back towards the 38% retracement at about 5616.00. So if indeed tomorrow does induce the rally, that's going to be something we most certainly need to pay close attention to. Now, to remind everybody, right now, there's only 7 hours left to take advantage of Apex's 80% sale off all their valuation accounts, pass in as little as 1 day. And if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, let's talk about the economic news that we had come out today. It actually came out rather good. We look at the core PPI, came in better than expected. PPI month over month came in better than expected. And the weekly unemployment claims also came in better than expected. Well, tomorrow we have a little bit of news at 10 a.m. We have preliminary consumer sentiment, followed by preliminary inflation expectations. And then we have the potential headline news at any moment, tariff this, tariff that from this country, that country, and such. So tomorrow we're going to see, do we get any more tariff news? And will this news at 10 a.m. be enough to push stocks up higher? Now, if you guys are out there and you guys trade the futures markets, you know we got contract rollover. And right now we're coming up when it's time to roll over contracts. Some traders will roll them over on Friday. Some will be rolling them over on Monday. So what you want to do is go to cmegroup.com, click on the ES or NQ, whatever the case may be, whatever you're trading, come right over here to quotes. And we want to pay attention tomorrow to see if we should be rolling over the contract tomorrow. We want to pay attention to the volume. Which contract has the most volume is going to be the contract that I want to trade out here. Next, we come over and look at the volatility index today. The VIX was up 43 cents on the session. However, the VIX is looking like it may want to start pulling back here just a bit. Dollar index today was actually able to close up green. However, with the dollar index actually up today, look what gold did. Gold made another new all-time high. Can't stop, won't stop that 38% retracement. Well, you know what? Gold says, hold my beer. We're going to go ahead and go higher. So I can go ahead and remove that Fibonacci retracement for the time being. But as gold is going ahead and pushing up the new highs, notice the MACD indicator is failing to make new highs at this moment. Then as we come over and start looking at the QQQs, absolute bloodbath. Once again, Qs just breaking below the lows from a few days back. MACD indicator still looks horrible on the daily chart. On the 30-minute chart, we're starting to see that MACD indicator starting to flatten out, which could be the early signs of a potential bounce coming in the near future. Then as we dive down and start looking at the 30-minute chart, we can see similar to what we saw with the SPY. We're starting to set up that divergence. You can see the lows right down here. Look how low the MACD indicator was. Now we've come down and broke that low, not by a whole lot, but we did break the low, and the MACD indicator is actually producing a higher low. In yesterday's video, I warned you guys, when the MACD indicator gets back towards the zero line, we need to be very cautious. If we're still hovering down at these lower levels, watch out. That could be nothing more than a recharge point for another leg lower. Now we do have some price targets up above us. We have a gap right over here, which was produced out here on March 10th. And then we have another gap out here all the way from March 6th. So when we start to get that dead cat bounce, watch for the market to retrace back up. One of the areas we are going to want to watch when the dead cat bounce short squeeze gets underway is going to be this 38% retracement right up here, about 494.75. As we come over and start looking at the NASDAQ futures real quick, notice, could this be a double bottom pattern, or are we getting ready to break and go lower? Now, just to play devil's advocate real quick, if this is going to be a double bottom pattern, let's go ahead and map that out. And I like where that target comes into play. That 100% level comes right near this upper level high volume area of the profile. Now with this pattern, since each of these candles are 4 hours in times, I'm not saying we're going to make it there today, tomorrow, whatever the case may be. It may take several days before the market gets up there. Now, when this pattern actually gets validated would be once we break above the top of this swing that actually produces this double bottom pattern. So again, we want to be on high alert. If we really start flushing below this low, that's going to essentially negate the possible double bottom pattern. As we come over and start looking at the 30-minute profiles and the daily profiles, notice today we made it all the way down towards S2. If we were to grab our Fibonacci extension tool, we measure A to B equals C to D. We made it almost all the way down to the 161.8 Fibonacci extension level. Now, normally when the market completes an ABC pattern, it does something other than continue in that direction. So is it going to be consolidation, or is it going to be a bounce on the way back up? Some of the things that we can go ahead and do is pull our Fibonacci retracement from the swing high right over here down towards the low, and notice where the 38% level comes into play. One, we've already come up there and hit it once. So now as we come back up and we start coming into that 38% retracement, I would then be more inclined to think we're going to hit the 50 and possibly the 61.8 fib level. And then we'll see if we start pushing through that, then we have a chance to really get going back up. However, if the market essentially starts to fail right around those levels, we want to be on high alert that we could basically be setting up another ABC pattern on the way down. Now, we also have this potential double bottom pattern out here on the 30-minute chart as well. Let me go ahead and remove those fibs real quick. Here would be low number one. Here's low number two. And if we go ahead and we measure how far, where would be the completion point? That would be all the way up here at 19,622. And again, that pattern is not validated unless we start breaking above the swing point right up here at about 19,396. Now, if you guys like to see which prop firm has the best payout policies, then make sure to check out this next video right here.